Welcome to another episode of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. Today, we'll take a look at a bearish engulfing trade setup. A bearish engulfing pattern is a very solid and strong pattern to know because it's just a single candlestick that we are looking at. It's easy and simple to use pattern. So let's go on to the charts and we'll take a look at what a bearish engulfing trade setup looks like, how to place a trade based on this trade setup, where to place your stop loss and take profit targets, and how to exit the trade with a profit. Here we are looking at a bearish engulfing trade setup. This is dollar-yen 15-minute chart. We see that the price is moving lower here. It pulls back into our daily pivot and then holds below this pivot point here. And then we see price trying to push higher. Immediately after that, we get a bearish engulfing candle close. A bearish engulfing candle close is where if we were to place this candle on top of the previous candle, it will completely engulf the candle. So we should not be able to see the candle behind it. So that's called a bearish engulfing candle. It just shows that there's a shift in momentum to the downside, and now we are looking for price to move lower. So it's a bearish reversal signal for us. Once we see this bearish engulfing candle close, we enter the trade short. We can either enter at the close of the candle or we can wait for a bit of a pullback here. And our stop would go above this previous support resistance level here. We just want to make sure that we have enough room for our trade to breathe in case price does pull back. So our stop would go above the previous high and we sit in the trade as price goes lower. Then we see that the price starts to pull back into our R2 pivot point level here, but we see that the price is holding below that support resistance level. The support here turns into resistance and we see that the price continues lower and we stay with the price. Then as we get into our R3 level, we see that the price starts to give pins in the bottom. We have a bullish pin bar close here. So this is a good place for us to exit the trade because as we can see, price has gone from our daily pivot to R1, R2, R3. So now the chances are price is not going to get too much lower, so we close the trade. From entry to exit here we have 45 pips in our trade. So just to recap, a bearish engulfing candle closes when price reverses direction, so price starts to move lower. And if you were to take this red candle here and place on top of the previous candle, it will completely engulf it or cover it. So this is our bearish engulfing candle close here. Once we get this type of a trade setup, we're looking for price to move lower. So we can either enter our trade at the close of this candle or we can look for a bit of a pullback here and we are entering the trade short. Our stop would go above the previous high here and we stay with the trade as price moves lower. So as price starts to pull back here, either we can exit the trade or we can wait and see what happens at the next support and resistance level, which is right here. Price stays below this, so we can take it to the next support and resistance level, which is our R3 here. Now price is starting to get extended, and we see tweezer bottoms here. We see two pins into our support level, so this is a good place for us to exit the trade. From entry to exit here, we get 45 pips in our trade. So our profit is 45 pips or $450 if trading one standard lot. Thank you for joining me today. I hope you enjoyed this episode. If you like this video, please feel free to share it with your friends and like, comment, and subscribe below. And I'll be back with another great episode next time.